So if assets total less than $5,000, the income from those assets is simply the actual income that's being earned on those assets. And if assets are $5,000 or greater, income will be the greater of that actual income amount, or 2% of the cash value of those assets. So the savings account is valued at $10,000. That means I cannot any longer just use that under $5,000 asset certification. My total household assets are greater than $5,000, so I need to verify all household assets. I'll send a bank verification directly to the bank and ask them to complete that form. When they send it back to me, I will look at the information that they've completed. So let's say that this bank indicated the savings account balance to be $10,000. The current percentage interest rate would be 0.5%. The checking account has an average balance for the past 6 months of $326.62. The current balance is $101.33, and the interest rate is 0.00%. So now this information is the information that I'll be entering on the tenant income certification. So on the tenant income certification, if we zoom into Part 4, the checking account cash value, as it indicated in the HUD handbook, should be the average 6-month balance. So we're listing here the $326.62 as the cash value for checking accounts. The savings account was verified at $10,000 for the cash value. The annual income would be the $10,000 times 0.5%, or $50. So the total cash value of all assets is $10,326.62, and the total actual income from the assets would be $50. In this case, the total of column H is greater than $5,000, so we carry that $10,326.62 down here to the next line. That number is multiplied times 2% to get to an imputed income of $206.53. For item K, you take the greater of the total of column I or J imputed income. So the greater of those two numbers would be the $206.53. That would be our total income from assets for this household.